Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO stock and where it could be headed in the future. We'll be going over their latest price targets, price predictions, and news updates so you as an investor can stay informed. Right now, investors are talking about NIO because they have had a phenomenal catalyst as of February 15th, where they unveiled a new battery swapping station over in Denmark. After talking about that, we'll be going over to discuss how NIO can be very resilient during negative macroeconomic times and how their long-term trajectory looks very promising. Moving right along here, our next news story is about a naysayer of NIO saying that investors should sell the stock. So let's see what evidence he gives for that. And then lastly, we're going to talk about how NIO is diversifying internationally as well as developing their overall NIO Phone and how that is working out for them. For more videos on NIO, remember to go and annihilate that like button, subscribe if you are new, comment down below where you think the NIO share price is headed in the future, and without further ado, let's jump right into today's stories. NIO has opened their first battery swapping station in Denmark, in a very critical area that's just an hour away from their capital, which is Copenhagen. Right now, the NIO stock price trades for $10.47 per share, with a market capitalization of $17 billion. And as we analyze these articles, you'll notice that one author is very bullish and positive, the other author is very bearish and negative, and lastly, the final author is somewhat in between. And as an investor, I think you should be armed with all of this information so you can make a wise investing decision. NIO's ability to swap out batteries from their electric vehicles has been a huge selling point for NIO, which has differentiated them compared to other rivals such as XPeng and Li Auto, particularly over in the European market. NIO has been infiltrating the European markets ever since October of 2022, especially through its NIO Subscription models. And for me, their subscription models are very successful and lucrative, and they are working very well over in China, to where right now, the price for these subscriptions is close to $1,300 per month. And we will talk about these later in the video. Currently, the NIO stock price has dropped lately after they delivered less than impressive delivery results for the month of January, which we will also talk about their delivery projections going forward. But that's not all. Even though the current share price hovers for around $10, investors believe this company could surge up to $15 per share, and that's when investors should really start to get excited, according to this author. On top of that, NIO plans to launch new models later this year, which is going to act as a phenomenal catalyst for their overall share price. And although NIO faces strict competition from Tesla as well as other electric vehicle makers over in China, we could see NIO actually come out on top here. But what do we mean by that? Well, the author of this article is still very bullish and positive on NIO, where he anticipates that the top-of-the-line growth will continue, especially as they further infiltrate the overall European market, which will then reflect very positively not only in their share price, but the share price will continuously gain value over time due to NIO being very well positioned to outperform current projections for the full year of 2023. So let's dissect what he means by that. The author believes that NIO is well positioned to beat their overall delivery projections among professionals on Wall Street, which will bolster their top-of-the-line growth. Right now, the author isn't too concerned about various pricing wars that are going on right now, and he's referring to Lucid, Tesla, and Ford lowering the prices of their electric vehicles, but NIO is not wanting to lower their prices because NIO already is selling very cheap electric vehicles that work very well. So how is NIO dealing with this competition? Well, NIO is dealing with this competition by not lowering their overall prices of vehicles, but rather by further differentiating themselves due to their battery as a service program as well as their battery swapping stations. And that's where that subscription model comes in, because as of right now, NIO currently operates over 1,300 stations over in China and 10 in Europe. However, NIO anticipates that they want to increase the number of power swapping stations to 1,700 in China and to 120 stations over in Europe by the end of 2023. NIO's management also commented that they don't want to reduce the prices of their overall vehicles. And although this could impact their overall demand, the author believes that NIO's vehicles are already priced competitively, where they don't have to lower their overall vehicle prices because they are already so competitive. But how does NIO stack up against Tesla? Well, in overall deliveries, not very well, but through diversification, NIO is making loads of ground. For instance, Tesla is only selling their Model 3 and Model Y over in China as of right now, while a competition such as NIO and BYD offer a broader range of alternatives. For instance, NIO has 6 vehicles that they are selling over in the Chinese market, while BYD has 60. That's why, for me personally, Tesla and BYD make up the majority of my electric vehicle portfolio. But nonetheless, NIO is still a very good option to buy, because they are trading at a relatively cheap accounting ratio known as their price to sales ratio, to where they're only trading at 2.2 times, and their peer group's sales for their projected revenue comes in at 2.3 times, and because NIO is trading at a lower ratio, that makes them a better buying opportunity, so investors are getting more bang for their buck. And analysts and professionals and experts in this area also agree. Out of 31 analysts that currently cover NIO's NIO stock, 26 of them give it a buy rating, while the remainders have hold ratings on the company. Well, none of these analysts say to sell NIO. These professionals also believe that NIO is undervalued right now, only trading at $10 per share, because they believe by the end of the year, NIO could surge to $17 or $18, representing a 65 to 77% increase in their overall share price over the next 12 months. But just because analysts say something, that doesn't mean necessarily that it will come true, because there's also other institutions which disagree with this bullish outlook. For instance, Zacks Ranks has a proprietary ranking system which ranks stocks anywhere between 1 and 5, where 1 is a strong buying opportunity and 5 is a strong selling opportunity. NIO currently ranks as a 4, which means that NIO, according to Zacks Rank, is a selling opportunity. But this is why it's important to do your own research and not take what analysts say for granted. You need to understand the pros and cons of this company and whether or not it's good for your personal portfolio. Because even if it's good for my portfolio, that doesn't necessarily mean it's going to be good for your portfolio. But let's talk about what other news updates we can anticipate from NIO. Well, this particular author believes that NIO's share price will trade sideways for probably the next year, meaning that investors may not get substantial gains from NIO. But let me actually disagree with him. But first, let's go over why he thinks this. The author believes that NIO's share price will trade sideways, maintaining between $9 to $12, is mainly due to the mixed bag of catalysts as well as negative news stories about NIO. For instance, NIO's vehicle delivery numbers for January of 2023 were not impressive because they only delivered 8,506 vehicles, which is not good because last year in January of 2022, the company delivered 9,652 vehicles. So clearly, the delivery rate has declined for that particular month. To offset this, NIO is trying to diversify their revenue streams by entering the very competitive smartphone business. However, NIO smartphone has gotten mixed reviews. If you want a picture of the NIO smartphone, you can look on screen right now, and here it is. Nothing too flashy, but overall, there's nothing super stand out about it. It's relatively basic in its overall functionality, as well as its overall look. To where some comments say that the NIO phone is ugly or lacks originality. However, luckily for NIO, this is not their main revenue driver, and the more that they sell electric vehicles, that's going to be the thing that makes them the most money. The author concludes by saying that there's a lot of positive catalysts happening, but also a lot of negative news updates surrounding NIO, to where the author believes the company will just trade sideways in their NIO stock price until NIO overcomes their problems. That's why I like Tesla and BYD, which are also electric vehicle companies that are already successful in my personal opinion, but I do own NIO stock. The only large problem with NIO, Li Auto, XPeng, as well as BYD is that these are all Chinese EV makers. And if anything were to go bad between the US and China, you can anticipate that the shares of these companies will absolutely plummet. So it may be better to focus more on Tesla, maybe Rivian, Fisker, or Lucid, because these are more homegrown companies as opposed to foreign companies, because this takes on geopolitical risks, especially as we have seen very negative news updates regarding China and their relationship with the United States lately, to where the US believes that China is spying on the United States and their military bases, either by surveillance balloons or building businesses right next to secured facilities. So you need to keep in mind, as tensions increase politically, this could negatively impact foreign companies located over in China. But again, that is for you to weigh the risks risk to reward because many analysts believe this company could surge from around $10 up to $17 to $18, while other institutions say to sell the company. Lastly, I would say my favorite part about this company is that we are going to see a giant catalyst come up here soon where NIO is going to release new vehicle models, and that's what personally I'm excited about, and I could even trade off of the momentum that I believe will be added to NIO's share price once these new models are released. But we're just going to have to wait and see what comes of those new models and if it can positively impact the overall share price of the NIO stock. So with that being said, I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now, subscribe if you are new, and I will see you in the next YT video.